Hello and welcome to the channel. In this video, I'll be going over my portfolio, my Bitcoin plan, and how I'm using XBCI and Stretch to maximize my returns. I sold some of my rental properties last month to buy Bitcoin, and I'm planning on buying more because my goal is living off of my portfolio. In this channel, I'll be doing portfolio updates, sharing my monthly income strategies, sharing my investment plans, and taking you through my journey of growing my portfolio. I'm not a financial advisor, and this is not financial advice. This is just my journey. We're gonna start off with my portfolio breakdown. Today is May 28th. And I purchased BTCI, $10,000 worth of BTCI this month. And yesterday I sold my Stretch. Since my last portfolio update, which was May 21st, I received a dividend from BTCI and I sold all of my Stretch. I was planning on buying more Bitcoin, but it looks like Bitcoin is going down. Since May 21st, let's see how much Bitcoin was on May 21st. So it went down from 78,000 to 73,000. So I want to purchase more Bitcoin, but I feel like I should wait till it drops more because I don't want to buy, let's say, more BTCI and then it's just going to go down 30%. That's even more than the distribution. BTCI is the NEOS Bitcoin High Income ETF. The distribution rate is 26.36%. And then in my Roth IRA, I'm currently holding about $10,000 in Stretch. And I received on May 22nd, I received a dividend from BTCI. I held BTCI before I purchased Stretch. And regarding my health savings account, I'm currently holding about $5,000 in Stretch. And I received a dividend also from BTCI on May 22nd. I like to see everything in this table. It's much easier for me to see everything like this. So I just fill this out. So like I said in my last video, I sold some of my rental properties last month to purchase Bitcoin. I couldn't sell everything. I still have one more property to sell, but I didn't want my long-term capital gains tax to be too high. So I can't sell everything in the same year. Let's go over this quickly. I have $115,000 in equity in my rental property. This over here is my portfolio breakdown. And this month I bought $10,000 worth of BTCI and the rest is cash. I have a large amount of cash because I just sold my rental properties and I'm planning on deploying that money into Bitcoin or different Bitcoin products. So yesterday I sold my Stretch position in my brokerage account. So I'm just gonna update this. So this is currently the breakdown of my portfolio. And here you could see the distribution rate that I filled out. I only get 4.11% on my rental properties. That's why I wanna sell my properties because the return is a lot lower than when I purchased the properties. And then BTCI, about 26% is $217 a month. This is just an estimate. And Stretch is currently paying 11.5%, which is $144 a month. Stretch is the Strategy Variable Rate Perpetual Stretch PRF SHS Series A. Stretch Short Duration High Yield Credit. Stretch is currently paying 11.5%. And the rest is in usually FCDXX, but I just sold Stretch, so I have to purchase FCDXX. FCDXX is the Fidelity Money Market Fund Premium Class. So you have to have over 100,000 to purchase FCDXX, but you don't have to maintain 100,000. It gives a little bit of a higher yield than the SPACs, Fidelity SPACs, which is their default money market fund. I look at all three of my accounts combined, my brokerage account, my Roth IRA, and my HSA. That way I could see the big picture. In this table, this is my goal for 2026. This was my plan when I started selling off my real estate. I can't currently sell off my real estate, so 115,000 equity in my real estate, and I want 100,000 in BTCI. which would produce about $2,100 a month in income, and $30,000 in XBCI, which would produce about $950 a month in income. So I'm just waiting for the right time to purchase BTCI and XBCI. So the thing is, Bitcoin is currently going down, and I think it's going to continue to go down. Probably, well, I don't know. Nobody knows where the bottom is. So I don't want to purchase BTCI and then Bitcoin will go down another, let's say 30%. That's more than the distribution, the yearly distribution. So I'm kind of waiting on the fence. And then XBCI is the leverage version of BTCI. XBCI has about a 38% distribution rate. XBCI is something I want to buy when it really does hit bottom. But of course, nobody knows where the bottom is. And I want to purchase back BTC, Ethereum, and XRP. I was holding those, but I sold them because they went down and I needed a tax write-off. And then so I sold them to buy them back. So I'm just waiting for the right time to buy these back. And I would like to hold about $50,000 in Stretch. So that would be like my savings account, and the rest in FCDXX. So that's kind of how I want my portfolio to look like. My goal is to have about $4,000 a month in monthly income from a $400,000 portfolio. That would be almost a 12% rate of return. So yeah, this is kind of my plan. This part of the portfolio is the income part of my portfolio, and over here is the growth part of my portfolio. And over here is just cash. Eventually, my goal is to have 60% of my portfolio income and 40% growth, not including cash. I am looking at everything together, my brokerage account, my Roth IRA, and my HSA. But I'm kind of using a different strategy between my brokerage account and my tax-free accounts, which are my Roth IRA and HSA. I'll just start with my brokerage. So my plan is to park my money in Stretch, and when Bitcoin goes down, purchase actual Bitcoin, purchase BTCI, and eventually XBCI. I'm planning on holding Stretch, BTCI, and XBCI long term because it's considered return of capital. So I only will pay the taxes when I sell. And I'm trying to avoid paying taxes this year because I already have a high tax rate from the selling of my real estate. Those are the benefits of purchasing those 3 ETFs. So I need as little transactions as possible. My original plan was to dollar cost average every month into Bitcoin and BTCI. But since I think it's going to go down more, I'm kind of waiting on it. What do you think would be the better option? Dollar cost averaging or just waiting till the bottom, which you don't know when the bottom is? And my plan for my tax-free accounts, my Roth IRA and my HSA, is also hold Stretch until I buy Bitcoin. I want to buy actual Bitcoin. I don't think I would want to buy BTCI in my tax-free accounts because I don't need the return on capital benefits because it's a tax-free account. So the plan is to park my money in Stretch and switch to BTC. But since it's tax-free, I'm kind of thinking, how would I maximize my return until I buy Bitcoin? Since they're tax-free accounts, I could buy and sell as much as I want without paying taxes. So I'm thinking in this account, until I want to purchase Bitcoin, instead of only parking my money in Stretch, to kind of buy and sell XBCI, Stretch, and BTCI to maximize my returns. So I've actually been doing this in my Roth IRA and HSA account this month, buying and selling to maximize my returns. So I actually pulled out my transactions from my portal. It's just easier for me to see it in this Excel doc. These are my transactions. So I wasn't necessarily buying it, getting the dividend, and selling after the ex-dividend date. I was kind of like, sometimes I was buying and selling it before the ex-dividend date. I was just playing around with it, seeing if I could maximize my returns. Over here, I wrote the ex-dividend date in May for XBCI, Stretch, and BTCI. The ex-dividend date is the specific day on which a stock begins trading without its right to the most recently declared dividend. If you buy shares shares on or after this date, you will not receive the upcoming dividend payment. Instead, the seller keeps it. Basically, if you buy before the ex-dividend date, let's say the ex-dividend date is May 15th. If you buy May 14th, one business day before the ex-dividend date, you will receive the dividend. If you buy on May 15th, you will not receive the dividend. I just want to see the example. XBCI 5/6 calendar. If the ex-dividend date is May 6th, you need to purchase on May 5th to get the dividend on May 6th. Stretch uses the term record date or record date. Let's say the record date for Stretch is May 17th. In order for you to get the dividend, you'll have to purchase on May 14th. Because May 17th is on a Sunday. If you purchase on May 15th, it won't settle till the next business day, which would be May 18th, and you won't own the stock in time for the dividend. So you'll have to buy Stretch on May 14th, for example, for it to settle on May 15th in time for the dividend. So I pulled out the transactions for May. And this is only in my Roth IRA and HSA. I don't like to buy and sell in my brokerage account. And I combined my Roth IRA and HSA here. As you can see, I purchased XBCI on May 4th. And I bought 300 shares for an average of $49.06. And then I sold XBCI in my Roth IRA and HSA on May 5th. So I actually purchased this before the ex-dividend date and sold it before the ex-dividend date. And by the way, I don't know if I'm going to continue doing this because Bitcoin is going down. So we'll see, but I didn't want to hold it a long time because XBCI is the leverage version of BTCI. And my total return was $263 for that. And then after that, on May 11th, I purchased Stretch in my Roth IRA and HSA for $100. I purchased it before the ex-dividend date, and I sold it on May 15th on the ex-dividend date. I had a $129 loss, but I got the dividend of $147. So my total return was $17. Not a lot. The thing is, when I buy it for the dividend, after the ex-dividend date, the price of the stock goes down, and it could go down the amount of the dividend. Even more. So here it wasn't even worth it. Oh, and by the way, I deposited $369 to my HSA. And here I deposited $366 in my HSA. That's why the amounts are a little higher, because I deposit money to my HSA. And by the way, I'm only going to receive the dividend for Stretch on May 31st. And then again, on May 18th, I purchased BTCI before the ex-dividend date for $36.26, and I sold BTCI on May 20th on the ex-dividend date. So again, I received the dividend. I received a $341 dividend, but then I sold it at a loss of $314 after the dividend date. So I only had $26 left. And lastly, I purchased on May 21st Stretch in both my Roth IRA and my HSA at a price of $99.3. I didn't sell it yet, but my plan is to sell it at $100. So up until now, the total return is $307, which is 23.86%. So let's say in a week or something, I will sell Stretch at $100. That would bring my total return to about 32%. So that was kind of my plan. We'll see in my next video how much I sell Stretch for. So 32.46% compared to 11.5% if I just purchased Stretch. As you can see, this is 11.5. So if I would have bought the same amount in Stretch, I would have made $150 compared to, let's take this off, compared to $300. It's not a lot, but I was just playing around with it to see. So we'll see. I don't know. Let's see if I'll do this next month. I wrote down the next month ex-dividend dates for XBCI, Stretch, and BTCI. Yeah, Bitcoin is definitely going down. And Stretch See, stretch usually stays around the 100. Well, after the ex-dividend date, or on the ex-dividend date, it will go down usually, but then it would slowly go back up to 100. It's supposed to stay around the 100, but when Bitcoin does crash, stretch does go down sometimes. So it's not 100%. So as you can see, let's see the past year. So when Bitcoin goes down, stretch can go down. So stretch is not 100% like for a savings account. Ooh, it looks like if I buy stretch back in my brokerage account, I would be getting stretch at a discount. Okay, we'll see. I wasn't planning on buying and selling stretch in my brokerage account because I'm losing the return on capital benefits. I don't want to make a lot of transactions and taxable events, but I keep on selling stretch because I want to buy Bitcoin, and then I'm like, it's not low enough, and then I buy stretch back. So, but it looks like if I buy stretch, I could be getting stretch at a discount because I bought stretch. The last time I bought it was 99.04, and then I sold it for 99.2. So I didn't sell it at a loss. I just want to buy Bitcoin, and stretch does go down when Bitcoin goes down sometimes. You can't rely on it to always stay around the 100. Let me know if you would buy and sell XBCI and stretch and BTCI in your tax-free account, or just park your money in stretch. Let me know what you think. And also let me know what you think. Is it better to DCA, dollar cost average, into BTC and BTCI from stretch, or just kind of wait till Bitcoin goes down further and then lump sum everything in? I will see you in my next portfolio update, and subscribe to my channel so you could follow my financial independence journey, and I will see you in my next video.